Multifamily investing made simple. That's what we're doing today. I'm going to give you a real life example of my 56 unit apartment, how I bought it for $4.75 million and how it's worth a whole heck of a lot more today using the multifamily BRRRR method. Let's get into it. Okay, so your guys' feedback on our last case study videos were so good. I'm going to show you the BRRRR method on it. Buy it right, rehab it, fix it up, rent it out, refinance it. And this deal is now ready for refinance. Let's talk about buy it right. Step number one, how do you find the deal? Off market via broker relationship. I've said it time and time again. You need to build relationship with brokers. Brokers control the deals. The more hands you shake, the more money you make. And if people don't know you, they cannot flow you. So you need to find the top commercial brokers in your area. Work with the Stephan group. If you're here in Michigan, that's what we're here to help you get into real estate. I own a brokerage with my wife, so we can help you. Go on LoopNet, go on the MLS, look at the top brokers who are doing transactions in your area, form relationships with them because they're the best source of your deals. When you get a broker on the phone and they're selling a deal that you're interested in, you need to ask them this question: when did it last sell? Because that's going to tell you how good of a deal it is. The longer the previous owner has held on to it, the better of a deal it was. So this 56 unit last sold in 1993. I bought it in 2023, 30 years. It's a great deal. They never wanted to get rid of it. So that right away excited me about this deal. The play on this deal specifically, rents were $650 to $800. Market rent today, $1,000 to $1,150. So there was substantial delta there. He owned it in cash. He just wanted no headaches, but their rents are going to be super low. If you guys find that, jump all over it, because this is what's called the magic formula in real estate investing. A dollar is not worth a dollar in multifamily. $1 divided by the cap rate equals your valuation increase. And this is how you can make millions of dollars with multifamily. Let's just say on this deal, $200 of rental increase times 56 units. That's $11,200. Well, there's 12 months in a year. Bam, so you're making $134,000 more per year. Let's divide it by a 6% cap rate, which is where this property originally appraised for. That's $2.2 million in valuation increase. You guys need to know this magic formula. Drop a comment below. Does that formula make sense to you? Does that excite you? Comment below. I paid $4.85 million for this asset. I was so afraid when I was at the bank wiring this money because it was the biggest amount of money I've ever sent. And I really felt like I overpaid on this deal. You might feel like you overpay, but it's not about what we pay today, guys. It's about what it can be worth. So I paid $4.85 million. I felt like I overpaid. The debt on this deal, we did an 80% loan to value loan, 25-year AM, 2 years interest only, 7.51%. I sold all my smaller units to get into this deal. The purchase price was $4.85 million, but what did I really pay? I only paid $970,000 because that was my down payment. So remember that, guys. You only pay what comes out of your pocket. Purchase price is one of the least things you need to worry about. I implemented a cost segregation study on this property. We took $900,000 in year one tax savings. My wife and I then receive a tax credit of $900,000. I'm almost breaking even just on that. When I bought it, the rent roll was at $45,565 per month. The NOI was $260,000. NOI, $260,000 divided by the cap rate, which is 6%. What's the valuation? Drop it in the comments. What was the property worth when I paid for it? $4.33 million. If you're just looking at purchase price, you don't need to care what you're paying today for the property. You need to care about what can it be worth when I run the BRRRR method. Everyone wants to get into multifamily. There's way more buyers than there is product. That's what's called supply and demand. So when there's less supply than there is demand, the prices go up. Don't fixate what it's worth today. What can it be worth in the future? Our rent roll today, after we've fixed the problems, is $56,185. Where was it when we started? About $44,000. Our NOI for this year, $474,800. My wife and I, we can reduce expenses. So don't just think about how can I increase the income. A lot of the times when you're buying a multifamily asset, look for ways you can lower expenses because that all adds to the NOI. What is the deal worth today? Let's say we're at a 6.5% cap rate because that's a little bit more expensive today. So our NOI, $474,800 divided by our cap rate, 0.65% cap rate. What's our valuation today? $7.3 million. What did we pay for it? $4.85 million. That's the BRRRR strategy. Bought it right, overpaid on day one to get into it, but it was the right deal, the right property. It's a great location. We fixed it up. Now we're refinancing, and then you can repeat it. All right, so we're here at the 56 unit. As you can see, we have beautiful brand new roofs going in. This was our first really big property. When I took over this property, I knew the roofs were gonna go. This was a major expense that we knew had to get taken care of. It was in our business plan. I'll be honest, I kind of avoided it for a while. This is structural. This is very important. You gotta take care of your assets. Take care of your assets, and your assets take care of you. We had multiple contractors come out and bid this out, found a great company who was very timely, and we're getting this done. This is part of our value add. We took care of what was most important. Deferred maintenance, the structural roofs, which was a multi-six-figure fix there that we had to come in and do. Some exterior things. So just remember, stick to your business plan. As of next week, we're gonna have brand new roofs on this asset, and we get to refinance the asset. We did an interest-only loan for 2 years on this property to be able to do stuff like this. You get to get more cash flow. We're not paying down the principal, but there's more cash flow coming in monthly as we ran our business plan to be able to do stuff like that. This is why doing interest only and working with your lender, like I always preach to you guys, having a business plan, but communicating that business plan to the lender. I always love to say, I'm gonna put all that money back into the property. Something else too big with the roof, it's a capital expense. So it goes below my NOI line, which is huge. So that doesn't impact my NOI because it's a one-time expense. That's the beauty of the tax code with real estate investing. They want you to invest in your properties. They want you to take care of your properties. So this does not impact the NOI. That's another huge bonus. All right, so before I let you go, I've got a couple key points here, but hey, I wanna hear from you. Is this inspirational? Is this helpful? Do you have questions about this BRRRR method multifamily? Drop them below. So a couple key points for you. Number one, never compromise location. That was an A+ location property. I'd rather you buy a smaller property in a great location than a big one in the slums. Number two, pick the right lender. I had the right lender going in. They're going to do the refinance for us. Number three, buy below replacement cost. The replacement cost is the cost today to build that building. That building's replacement cost is over $7 million. I paid under $5 million. Number four, look for value add potential. Don't buy something that's fully stabilized. You're looking for value add. You're looking for out-of-state owners. Get creative, but look for value add. Number five, don't obsess over year one. When I bought this 56 unit on day one, it looked horrible, but I picked the right lender. I knew my business plan. I had confidence in myself to execute, and I knew we'd be able to make it a winning property like we're doing with it. So real estate's not getting any cheaper, especially in good areas. So don't just fixate on day one numbers. Number six, price and cap rate don't matter on value add. Don't worry about price. Worry about what can it be worth in the future. And number seven, know your business plan, know your exit strategy. It's not about the numbers today. It's about selling the lender. So know your exit strategy. And your exit strategy, if we're trying to build wealth, shouldn't just be to sell it. Should be to refinance it and then do the final part of the BRRRR method, which is repeat it. Go buy another property. Guys, that is the 56 unit case study. Drop a meaningful comment. Do you agree? Do you disagree? Do you think I'm full of crap? Dude, put it in the comments. If you want to learn more about the BRRRR strategy investing, get my masterclass for free in the link in the description. Also grab my book, The New Rules to Financial Freedom, link in the description. If you need any help, feel free to reach out to us, or you can apply for my coaching program, link in the description. Till next time, we'll talk soon. Thanks.